They built one of the biggest dams in Asia. They even brought Formula One to India. So how on earth did Jaiprakash Associates, a true titan of Indian infrastructure, end up in one of the country's most massive corporate bankruptcies? Well, we're going to break it all down. I mean, seriously, think about that. This is the company that put India on the global F1 map, a huge symbol of national pride and ambition. How did it all go so spectacularly wrong? Let's dig in. Okay, so first, to really understand the fall, you've got to appreciate just how high this company flew. For decades, Jaiprakash Associates, or JAL as we'll call it, was an absolute giant in Indian industry. Its empire was everywhere: massive dams, power plants, fancy hotels, and yeah, even international sports. The company's ambition was just immense. It was founded way back in 1979, and the JP Group built these legacy projects, things like the huge Terry Dam and the incredible Yamuna Expressway. The absolute peak, you could argue, was in 2011, hosting India's first ever Formula One race. But then, just over a decade later, in June of 2024, the whole empire was declared insolvent. All right, let's get to the heart of the matter, because the problem really boils down to a truly staggering amount of debt. After years and years of just relentless expansion, the financial foundation it started to crumble. This is the number that forced the company to its knees. The lenders, we're talking a group of 28 banks, have filed claims for over 59,000 crore rupees. To put that in perspective, that's about $7 billion US. Just a mind-boggling figure. And then, here's the other side of the coin. This is what all of JAL's remaining assets are worth when you put them all together: cement plants, power stations, hotels, real estate, the whole shebang. The gap? It's just enormous. And this chart, wow, it shows you the crisis in really stark terms. That huge bar on the left, that's what the company owes. The little one on the right, that's what it's worth. That massive gap means the banks could be forced to take a nearly 80% haircut. And that basically means they have to accept they're probably never going to see most of the money they loaned out ever again. So what's actually happening right now? Well, JAL is in what's called a Corporate Insolvency Resolution Process. A court-appointed professional has taken over the whole company to figure out a path forward. The goal is to either find a buyer who can rescue the company, or failing that, sell off all its assets piece by piece to pay back as much of that debt as possible. So, with a giant like JAL up for grabs, the big fish are going to start circling. A bidding war has kicked off, and some of India's biggest corporate names have jumped in, sensing a chance to snap up some valuable, though very troubled, assets for a steal. And I mean, look at this list. It reads like a who's who of Indian industry. You've got 5 major players in the ring, from the massive Adani and Vedanta groups to giants in the cement and power sectors. This isn't just a simple sale, it's a high-stakes battle for what's left of an empire. But here's where it gets really interesting. Not all these bids are the same. See, most of the suitors have put in conditional bids. That means their offers are only good if a court case over a key asset goes their way. Only one, the Adani Group, put in an unconditional bid, basically signaling, hey, we're willing to take on all that legal risk. So what is this big legal risk that has almost everyone else so spooked? Well, it all boils down to one massive, and I mean massive, piece of disputed real estate. We're talking about 1,000 hectares of land in Greater Noida. It's part of the company's super ambitious sports city project, and yeah, it includes the F1 track. This land is one of JAL's most valuable assets, but right now its ownership is completely up in the air. So here's the crucial point. The local development authority actually canceled the original land deal. JAL has appealed it, of course, but the final decision now rests with India's Supreme Court. This legal limbo has thrown a giant shadow over the entire deal. And you can see why the bidders are so hesitant, right? This quote from a report just hits the nail on the head. They're afraid of a repeat of a past case, where the buyer ended up stuck in legal battles over assets after the deal was already done. Nobody wants to buy a multi-billion-dollar headache. So that brings us right up to today. The fate of this entire company is now hanging on a few really critical decisions that we expect to see in the next few weeks and months. The path forward has 3 major hurdles. First, the lenders have to finalize the bids, and that's probably going to happen through a high-pressure auction. Second, whoever wins needs the green light from India's competition watchdog. But the biggest one, the one everyone is holding their breath for, is that Supreme Court ruling on the disputed land. And just when you thought the story couldn't get any more complicated, the company released its latest financial report. And honestly, these numbers are a total head-scratcher. Look at this. Revenue has collapsed by nearly 60%, and yet somehow the company swung from a massive loss to a pretty significant profit. This suggests there's some serious financial rejigging happening behind the scenes, making it even harder for any bidder to know what they're actually buying. And that leaves us with the billion-dollar question, doesn't it? Jaiprakash Associates is rich in assets, but it's absolutely buried under a mountain of debt and legal uncertainty. It's a classic high-risk, high-reward scenario. The battle for its future is going to be a landmark case for India's bankruptcy laws and a wild lesson in just how fast an empire can crumble.